And y'all touched on real estate, and usually, I mean, stock market and real estate, two good ways to make money. But right now with interest rates where they are, it's like, I mean, people are probably not getting into real estate as much as they would to beat inflation because of that. I would think it's just hindering it a little bit. And so more people should maybe or are maybe going to the stock market.
Yeah, it's definitely, I mean, it's definitely harder. I mean, if you're, just from a monthly cash flow perspective, if you were able to put, you know, I guess usually let's talk rental properties. Put 20% down on the rental property, and when rates were at 3%, that cash flowed pretty nice. With rates maybe at 6%, that doesn't cash flow as nice. So it all depends. I feel like it all depends on your goals a little bit there, or how much money you had to be able to put down on a property. But then again, money in real estate is made because of the leverage. So yeah, it's definitely harder to make money in real estate right now, but I think there are opportunities out there that can still make sense. And then as rates come down which I feel like the Fed is, all but said with 100% certainty that it's going to happen. Like over the next 6, 12, 18 couple of years, probably the end of this year into 2025 and then 2026, I think rates come down, makes real estate look a little bit more attractive. And I think if history shows anything, they end up cutting rates faster than what they have had previously kind of said that they were going to. So maybe things are a little bit more attractive even by mid to late 2025 to where real estate starts to pick back up. Because I do feel like there are probably a lot of people out there who are ready to buy real estate. They're just waiting for rates to come down a little bit. And so I think you could see things pick up when that does happen.
I mean, we've had a lot of people park cash here in the money market fund just waiting for that too.
Yep. Yeah, I do think real estate is, again, I mean, we're not Nostradamus on this, but I think at some point soon, when rates come down, real estate will kind of take back off again.
It's tough because it's a double-edged sword. One, yes, rates are going to come down, but supply is still lacking, and home prices across the U.S. really haven't moved. They haven't really come down. Obviously, there's pockets here and there, and different cities are impacted differently. But with home prices staying the same, if not still increasing, and interest rates being so high, affordability is just awful. So then just imagine rates come down, supply stays the same, people start buying again. I mean, it's supply and demand, econ 101, where you all of a sudden really add to the demand side. You don't help the supply side as much. It can really start to increase cost again, like we had a couple of years ago. Or another theory is maybe the people who are stuck with a 3% mortgage, maybe they start to really sell again because they can add to the supply, because now they're going to go out and potentially look for another home since rates have come down. But I guess that's still adding to the demand, even if it's adding to the supply. So,
well, and also with rates, if they do come down, I mean, how far do we really expect them to come down? They're never going to go back down to the 2 or 3s, I wouldn't think.
Never say never.
Never say never, right? But say they're at 5.5 even. That's still a big jump from 2.5 to 3 as far as affordability goes. So those new home buyers, young people that are trying to buy houses, they're still going to be stuck for a while, I think.
Yeah. Yeah. I mean, long-term average mortgage rate in the US, 7-8%? We're already below that. So people are just spoiled with recency bias with, hearing that people have 2.5, 3% mortgages. I personally don't feel like that's going to happen again, or if it does, it's because something really, really bad economically happened to crash rates. So I think, being happy in the 4 to 5% range, even in the 5% range, I think is a great spot to be with a mortgage.
I think there needs to be a resetting of expectations, which I feel like is kind of slowly starting to happen. Yeah. I feel like you're seeing people are still buying homes. I mean, you are seeing that. But I think
you're not going to see any 30-year-olds buying $1 million homes right now. I don't think, just because of that there, when they could have.
It hurts that. It hurts that person at a 3% rate, depending on cash flow, monthly cash flow. That house was maybe affordable depending on down payment size. But yes, I mean, that person that was maybe able to buy $1 million house at a 3% mortgage is now maybe in the, 6 to 700, 800,000 range.
Yeah.
Any opinions are those of myself and not necessarily those of Raymond James. Expressions of opinion are as of this date and are subject to change without notice. The information contained in these podcasts do not purport to be a complete description of the securities market or developments referred to in this material. The information has been obtained from sources considered to be reliable, but we do not guarantee that the foregoing material is accurate or complete. Every investor situation is unique, and you should consider your investment goals, risk tolerance, and time horizon before making any investment. Prior to making an investment decision, please consult with your financial advisor about your individual situation. Any hypothetical examples are for illustration purposes only. Actual investor results will vary. Raymond James does not provide legal or tax services. Please discuss these matters with the appropriate professional.